The S&P 500's approach towards 6,000 is being driven by a mix of positive factors, both domestically and globally. On the U.S. front, the Federal Reserve's shift toward interest rate cuts and the ongoing economic growth have set the stage for further market gains. Some market watchers have raised their year-end targets, highlighting the strength of recent market performance, even if valuations seem high relative to historical norms. The S&P 500 could surpass 6,000 as the Fed's easing policies create favorable conditions for stocks. On the global stage, China's recent stimulus measures could provide an additional boost. The People's Bank of China has rolled out its most comprehensive economic package in years to revive its slowing post-pandemic economy. This includes rate cuts, easier rules for banks, and targeted support for the housing market, with an aim to lift stock prices and stimulate domestic demand. The impact of these policies could ripple through global markets, particularly if China's economic revival helps reduce inflationary pressures worldwide. Lower global goods prices, especially from China's export sector, could ease inflation concerns in the U.S. and reinforce the bullish case for further gains in equities. In addition to these macroeconomic factors, U.S. market performance has been increasingly broad-based. The gains in the S&P 500 are no longer concentrated in just a few large tech companies. Other stocks in the index have outperformed in recent months, contributing to a more balanced rally. However, risks remain. Political uncertainties, such as the upcoming U.S. election, could introduce volatility, and market sentiment has reached levels that have previously preceded pullbacks. Moreover, Treasury yields have been rising, driven by strong U.S. economic data and increased demand for government bonds, which could put upward pressure on borrowing costs and temper market enthusiasm. Globally, the response to China's stimulus has been broadly positive, with stock markets in Asia and Europe posting gains. The increased appetite for risk, spurred by China's actions, could further fuel gains in U.S. markets. If China's efforts succeed in stabilizing global growth, it could add another tailwind for the S&P 500, potentially pushing it past 6,000. In summary, a combination of favorable monetary policy in the U.S., a broad-based stock rally, and China's aggressive stimulus measures could drive the S&P 500 to break the 6,000 mark. While some risks persist, including inflation concerns and political uncertainty, the market seems poised for further gains as both domestic and global economies respond to stimulus and easing financial conditions.